You've probably heard that parking can be a business expense you can deduct through your PC, but not all parking. So, which parking can your PC actually deduct? Let's talk about it. Short answer, it depends on the nature of your trip. And how CRA looks at this probably isn't the way you would intuitively think. Now, here's what I hear a lot. I drive to work. That's not a personal trip. I'm certainly not going there for fun. I work really long hours. I'm often on call. I need to park in order to earn income. So parking should be a deductible business expense, right? Why wouldn't it be? That certainly sounds reasonable, but let's unpack why it doesn't quite work that way. So here's how CRA looks at this. Driving from your home to your usual hospital or clinic is treated as personal commuting, and the parking at the destination is personal too, which usually means it's not a corporate expense. So let's take a look at a diagram that might make a little bit more sense. So the test is not where you parked; it is the nature of the trip. So going from home to your regular work site is a personal commute. Doesn't really matter if it's site A, site B. The parking at the destination is personal as long as it's a regular place of work. And regular in this case can mean a lot of things. Even once a month can be seen as a regular place of work. But going from site to site during the workday, that's business travel there. The parking is business too. So it's the same parking lot, can be the same dollar amount, but it's a totally different tax answer. The trip is what makes it personal or business. And then the personal commute home, the commute home, that's seen as personal. So now I don't want you to blindly trust me on this. So let's take a look at some precedent. The leading case is a tax court case, Adler versus the Queen, decided in 2007. It was a group of TELUS employees in Edmonton and Calgary. TELUS had given them free parking at the office. CRA assessed it as a taxable benefit. The court ruled, yes, it's a taxable benefit. Free parking at your regular workplace is something you'd otherwise pay for personally, so the value is taxed. The Federal Court of Appeal affirmed this approach in Schroeder, decided in 2010. So when does parking actually count as a business expense? That's the important question. So when you're driving from your clinic to the hospital during the workday, that parking can go through the PC. You're traveling between sites during the day. Site A to site B during the workday, any genuine site-to-site trip, and parking at temporary or one-off sites that aren't part of your usual practice, those have the character of business travel, not commuting. So what happens if you ignore all this and just have your PC pay for your regular hospital pass, your parking pass? First, there's likely a personal benefit inclusion. The cost the PC paid for your parking gets added to your personal income, or gets taxed personally, I guess, either as an employment benefit on your T4 if you take salary from your PC, or as a shareholder benefit if you don't, depending on your structure there. Second, the corporation's deduction is also at risk. The general rule is that a business expense has to be incurred to earn business income, and personal commuting doesn't really meet that test, so CRA could also deny the corporate deduction. Either way, you're no better off than if you just paid for the parking yourself. If just the benefit gets included, you're paying personal tax you would have paid anyway. If the deduction also gets denied on the corporate side, the PC is out the cost without a write-off. So you end up actually no better, and you'd be worse off than if you just paid for the parking yourself. So what is the cleaner path? Pay your regular monthly parking pass yourself out of personal after-tax funds. Keep that off the PC's books. When you do incur parking during the day at a different site, get the PC to reimburse you. Whatever payment method you use, keep the business parking clearly separated from commuting parking in whatever records you have. Keep your receipts, and something that CRA really, really likes, contemporaneous notes that are made on the day, close to the day, not that you're reconstructing at year end. So they want to see the date, where you went, why. The notes are what tell the story if anyone asks. This is the cleanest path. And obviously, this is just general guidance. So please talk to your accountant or yours, about your specific situation. Now, a couple of things that people often miss. This question doesn't really sit alone. It connects directly to vehicle expense planning, mileage logs, whether you should buy a car through the corporation, buy versus lease. Like those are all kind of related questions in this area. So I would say they are separate questions, but they're all linked together. So they should be kind of considered as such. And as well, one thing, the notes matter almost as much as the receipts. The receipt by itself is just a parking receipt. CRA is going to say, what is that? Explain that. The notes are what really tell the story, and that's really your backup. All right, let's wrap up. In summary, regular commuting stays out of the PC, paid personally. Site-to-site parking can go through the PC with proper records. If you have any follow-up questions, let me know in the comments. Thanks so much. Talk to you soon.